Welcome to Multifamily Insights. I'm your host, John Casman, and I want to thank you for joining us for another great episode. Now, if you're enjoying this show, do me a favor and leave us that rating and review. I want a fair and honest review. I want to understand what you love about the show and anything that can work harder for your investing goals. And if you have not done so already, be sure to hit that subscribe button so you don't miss an episode. Now, today we're going to be talking to Dan Kryzanowski. Dan Kryzanowski is an active capital raiser, equity owner, and passive investor generating double-digit yields and lower taxes via commercial real estate. Now, Dan has personally raised millions of dollars from accredited investors and family offices and has empowered his partners to raise seven figures on multiple occasions. Let's welcome to the show, Dan Kryzanowski.
Wonderful, John. Great to be with you all today.
Absolutely, Dan. It's great to have you this morning. And as we're doing this conversation here, I would love to learn a little bit more about you. So take 2 minutes, fill in some of the gaps from the bio that I just read.
Sure. And thanks for the kind introduction. I like to say I grew up in Scranton, Pennsylvania, so we can bring on the office jokes, and I'm sure we'll see it in the chat now. But yeah, my life was pretty simple. Listen, like a lot of Gen Xers possibly listening on the call, I went to school. I had a paper route when I was a child. My dad was a high school principal. My mom was a social worker. So, pretty typical of that generation that work, grab a pension, move on from there. So, I cue the rich dad, poor dad analogy for folks that haven't read it, or at least the cliff notes of it. Whether you're 20 or 60 or 40, I suggest doing it. But came through, was a beach bum a few summers, went to some great schools such as Wharton and Thunderbird, and once again lived a pretty standard career. Worked for Merrill Lynch out of school, traded equity swaps, was with this company, General Electric. I say it half jokingly for some of the youngsters that may not have heard of it. It actually, it's funny to think it was rated the top company in the world just a mere 15 years ago. So I came in and had the benefit of all the Six Sigma training and then all the gold standard marketing and going forward. About a decade plus ago, my wife and I, she's from Mexico, we moved to Austin, Texas. So I say we kind of beat the rush by about a decade here. And what was great, Austin, I think naturally moves you to thinking outside of the box. The Texas spirit is owning stuff for yourself, helping out the underdog, and some of my light bulb moments where when folks educated me on that, hey, there's a world of passive investing, you can use your retirement dollars and so on. So this has been something from just an education piece to a hobby to something that I've been evangelizing for the past decade that I feel is highly beneficial.
Yeah, and Dan, you talked about that upbringing, right? Your parents really being in more of the service industry, your father being a vice principal, your mother being a social work, the schools that you've attended, getting into trading equities, work for General Electric, and just really understanding how, finances work. And you talked about Rich Dad, Poor Dad, which has had a lot of influence for a lot of people to get started and ultimately moving into investing. Talk to us about that first investment. You mentioned that people were kind of educating you a little bit. What was that first investment like?
Yeah, so on the real estate side, I was co-best man in a wedding. So a lot of my stuff, no surprise, goes back to my youth to Scranton one way or the other. And I asked the other gentleman, hey, what do you do? And he said, flip house. I'm like, okay, so you flip houses. That's great. What does that mean? And he said 15%. So my ears perked up. And then he said, did you know you can use your retirement dollars? And for me, this was this, the C part of it, as they say, sort of moment to realize, wow, here's this money. And I've always had a gut feel to say, I don't want it sitting in the Fidelity or 2050 fund forever. I would be amazing to have access to that now to invest in what I want, when I want. So this was one aspect that led me on my passive investing journey. Another one, as I said, Austin, before Austin became Austin as we know it now, a few buddies invested in a bar on Rainey Street. So for those that have visited for South by Southwest, you kind of know what Rainey is. And long story short, I was doing the equivalent of crowdfunding with them before, crowdfunding, before the Jobs Act, just a few guys together, whether it was bars, restaurants, a comedy tour, great way for a tax write-off, not the best investment, but, trying a lot of things, fortunately not with, I'd say huge dollar amounts, but a lot of good lessons. And, like many of us, one of these led to a real world MBA, as I like to call it, where you do lose your shirt, but ideally the lesson you gain here is something that you carry forward for many decades.
So you talked about crowdfunding, right? And
Mhm.
basically investing in these bars in Austin. You had this house flipper who was the co-best man in the wedding. So you started investing passively through those strategies. At what point did you make that transition to multifamily?
Yeah, great question. So I know a lot of folks, and I love your audience, John, and the folks that we have in the community tend to go maybe from residential to a small multifamily. My journey was a little bit different. I ended up over a decade ago with Sparefoot, which was the first aggregator in the self storage space. So with storage being a small community, and before it was everybody's favorite asset class, so to say, I had the benefit of meeting all the CEO, COO, CMO in the space. And the net result of that is that storage became, outside of some smaller hard money loans for residential, my asset class of choice for my initial passive investments. So, like anything, I think it helps to know an asset class you understand well, particularly if you've had the benefit of being in that industry. So, I took advantage of that. At the same time, I always viewed 21st century diversification as a portfolio of multiple asset classes, multiple subsegments. And my light bulb moment was I had the benefit to speak at one of these family office shows. And even in front of open doors, they say, hey, we have less than 10% of our stuff in stocks and bonds. And, wink, wink, a majority of it's in real estate. So this is what led me then to, uh, getting an interest in multifamily.
Yeah, and you talked about being able to speak in front of family offices. Was that from kind of the day job, or how did you get access to be able to speak in front of the family office?
Yeah. So, I mean, throughout a lot of the 2010s, as I said, just my natural demeanor is is education. As I shared, my father was in education, and then also my mom with the social worker, taking that DNA to help the little guy, the little gal. I tapped into my retirement dollars, whether it was private loans, a smaller fund. I call it even an angel debt, even before angel equity, with some, whether it's a female entrepreneur, folks on the other side of the tracks, as they said. These were some of my early investments. So, with all that said, I was friendly with the gentleman, Henry Yoshida, here in Austin. Henry's previous company, Goldman Sachs, about 18 months in. And of all things, how the world works, Henry and I were on a plane to Las Vegas together. And I say, hey, Henry, you might want to check out one of these storage deals. And, did you know you can use your retirement? And Henry's a million times smarter than me. So he's like, of course. But in his mind, it was always twisting. Imagine if we can eliminate all the friction. So it's easy and simple for individuals to sign up. And then for folks raising capital, that they can evangelize a simple message. Did you know you can use your retirement? So with this, and this was about 5 years ago, I was an advisor, an investor, and roughly employee number one at Rocket Dollar. So kind of my mixed background, as I shared, whether it's, more sizzle because of the war in or because of self-storage, you name it. The likes of Richard C. Wilson and others were kind enough to invite me to speak on stage at some of the family office shows. And like anything, I think when one is an investor, you become a passive investor. That gives you a lot of credibility versus saying, I think about this a lot, or I work for this big money shop, and oh no, I would never do one of these investments myself. I, fully cannonballed in to say, yeah, I'm first an investor and then likewise an educator. So in good faith, I can share these discussions with both investors and sponsors.
I think that's just really powerful insights, right? I mean, part of it is being able to network and build these connections and relationships with these highly influential people. But you said something that was really insightful, and I want to make sure people heard it and understood it. You said, first, you are an investor, meaning you invested passively yourself. So when you're talking to people, you're talking to them about what you're doing, and that makes you credible when you're talking about the experiences you've had. Second, you're an educator. You're actually trying to teach people about what it is you're doing. Did you know that you can invest using your retirement funds? You don't have to have this money locked up for the next 20, 30, 40 years. You can actually tap into that to invest in these real estate deals while you continue to learn yourself. And maybe down the road, you become more active if that's what you really enjoy. But understanding those two steps, right? Being an investor yourself, being an educator, makes you very credible when you're trying to talk to other people about investing. I just think that's a really powerful insight. I want to make sure everybody understands. Talk to us about that transition, right? So we talked about how you went from self-storage, you're speaking at some of these family office events, you are investing yourself, you're educating people yourself. And I know you've helped a lot of other people invest in these deals as well. Talk to us about kind of that transition.
Yeah, and I love how you caught on to the investment side is important. I mean, we live in the world of Facebook, LinkedIn, TikTok, etc. I think there's a big difference between like and trust. I mean, you and I can give each other's heart smileys. I think there's a funny emoji on LinkedIn these days. That's not trust. Trust is when money moves, and in many respects, it's not the amount, although over time, what you do invest could matter with the sponsor, but that's showing trust. And that's also, I think, entering into a relationship of mutual trust, much like a marriage, you can say. So, with that, for me, it came natural. For some other folks, that may not be, whether it's from analysis paralysis or just, my parents weren't 60-40. I have a financial advisor. He says 60-40 stock bond split. Now, I think, a silver lining of COVID is folks said, yeah, I can live my life either a little differently or a lot differently. And part of this, comes through investing. You mentioned self-storage. One thing that I had the benefit when I was at Sparefoot a good decade or so ago was to speak with a lot of these COOs, CMOs one-on-one. For me, I learned things such as economic occupancy, which I'm sure a lot of your listeners, especially sponsors, are familiar with that metric. But, it's a great one to say, well, if you're 100% occupied, but you're only charging $1, well, you're not making that much money versus, having, being at 90%, but charging everybody, $10, just simple example here. So, from here, I felt I was able to identify folks that became my mentor also, kind of a co-education. So I, of course, was gaining insights on the tech side, anything to attract basically a lower acquisition cost and to share where they'd share from the operation side. So this was kind of the 1-2 punch. And like anything, I think when you're comfortable, like they say, would you enjoy having a beer with this person? If the answer is yes, then I think it makes it a lot easier also to mutually share education and learn, and then to broadcast that, because there really shouldn't be any secrets here in our community. I think the more folks that are made aware of that they can tap into different pools of money to invest in passive, I think is a net benefit, frankly, for society as a whole.
You had a quote that I love. You say, trust is when money moves. As we look to establish trust or develop trust, either with a syndicate or operator, or we're talking to potential passive investors ourselves, what are some of the things that you look for to help establish that trust?
Yeah, I mean, like anything, I think full transparency is paramount. Whether you have that conveniently on paper, but I think also verbally. I don't think you push folks too hard. I think you open and to learn about their situation. And there's been many times, I mean, right now I'm associated with BD Capital. It's a mix of multifamily, industrial, the Delaware Statutory Trust, DST. For some folks, for one reason or another, this may not make sense of our offering, and to really not push folks. But if you listen, I have a really good friend here. I consider him a friend now, but initially he was just somebody I met, had some discussions. He's like, Dan, you know what? My view's just, I think I'm either overweight at Texas or, there's more sunshine elsewhere in terms of multifamily. So because of some of the relationships I had, I was able to introduce them to some folks in some of these other states that I felt were, although I have not invested with them yet, I know other folks that have. I've been kind enough to serve on their podcast to share education webinars that I felt comfortable giving this recommendation. So the net effect of this story is this gentleman, although he was not investing with us, I feel there's kind of a mutual win in this discussion and this other third party that we're bringing in here to the discussion.
I love it, man. You talked about really just getting to know them, that transparency being key when you're looking to develop trust. And I think the other part for me is really just service, right? You talked about this individual who was not looking to invest in your market. You could have very easily said, okay, I can't make money off of this, then whatever, let me move on. But instead, you actually helped to find a solution for that individual, introducing them to other operators and helping them actually solve his problem. And that's what people are really looking for. Either you have the solution for what that person is looking for, but if you don't, maybe you can direct them. It's almost like if you go to a store or a restaurant and you're looking for something and they're out of that product. And even though, typically they'll try to direct you to the website, but if you need it right away, they may direct you to another store that they think has it, right? And I'm going to trust that recommendation from someone who's sending you to a potential competitor, because you know that they're doing it really to help you find what you're looking for, as opposed to just trying to make a dollar. And that's really, really key when you're looking to be transparent and develop that trust, particularly when we're talking about the kind of investments we're talking about. I mean, typically these are, $50,000, $100,000 investments. So people really want to make sure that they can trust you and the direction you're giving and the feedback you're giving, if they're going to work with you or some of these other individuals. So really good instincts there. When you think about trust, what are some of your red flags? When you hear someone say something or you see someone do something, what makes you walk away and say, I'm not going to work with this person?
Yeah, I mean, even before the what they say, part of what I just think it's difficult to be a one man or one woman shop at the GP level. As I referenced before, my real world MBA was probably because I was too excited about what I thought everything was going to go smooth sailing. Ultimately, it was just too much for one person on the GP side. So this, even before getting into how this person may have acted or not acted, it's just tough. I mean, a lot of things, whether it's, broadly speaking, supply chain, funding, et cetera. It's also difficult that everybody is a sticks and bricks construction guy and then, a legal beagle. It doesn't really play out that way. So I think with that, that's one thing that I'd say just from a checklist that you look at. Secondly, it's if people can't email you something over these days, I get really skeptical. Yes, they try to make it sound like it's very exclusive. I'm going to mail it to you. I'll take an email first. And, but that's it. At the same time, I realize not all of us are tech whizzes out there. Somebody may have Joe Smith at gmail.com and have it not yet tied to his brand, but has been in real estate or maybe has sold his business, has been through the entrepreneurial journey for a while and is now shifting over. That's not something that I instantly sort of push off. But if somebody claims like, hey, I've been to multifamily, I've done all this, and they may not have a website, then I'm a little cautious from there.
Yeah, it makes sense. What you're saying there is one, just being able to send over documents quickly so you can evaluate it, right? You don't want to wait for something to come in the mail and go through all this stuff and realize it's just not going to be a fit. If you like it, email the documents over. That way I can give you my quick feedback. Before that, you mentioned, if it's a one person show or, is there a team? Are there resources? And I think that's really important because you hear this over and over and over, but it is true. This is a team sport. When you're talking about investing in commercial real estate assets, it takes more than one person. There's not a single individual I know who's successful, who is doing it by themselves. It takes a team. That doesn't mean you need to have a big company, but you better have some partners or some people in key roles that are doing the various tasks that are necessary to be successful. And that last part you talked about was, just because someone doesn't have a big website and all that other stuff, doesn't necessarily mean that they don't have the experience, right? I mean, some people have been in real estate for decades and maybe haven't raised money for deals or haven't worked with other investors, or maybe they've had a single investor all this time and something changed in that situation and now they're looking to partner with others. So really just understanding what is the experience, the credibility, and really the ability to execute on what it is they're saying they're going to be able to do. Really good insights right there. Dan, talk to me a little bit more about kind of the markets and where you play right now.
Yeah, for sure. I mean, no surprise, I'm in Austin. We're in Texas. So you can say it's just luck of the draw. Some folks say Texas is what California was 40 years ago. Trust me, I see all the different license plates here. But I mean, ultimately, politics aside, Texas is a business-friendly state. The zoning, Houston tends to be a little more favorable than some of the other cities in terms of the ease to get things done. But, ultimately, folks are moving here. It's not whether they can work from home. They just have a boatload of equity from living on the coast, as they say, coming here, or for a lifestyle change, folks are going to come here. Secondly, I think folks are comfortable either downsizing or accepting like, hey, even though I lived in Brooklyn, it might take a year or two for me to find a house. So, I share that. So that kind of takes care of, call it your class A and class B. And then as you get closer to the C and D side, I think one benefit, at least here in Austin, which is a town that you really have to go outwards and commute in, vis-a-vis Dallas, which is out and up, I'd say. Here in Austin, we're at least sensitive to how quick we grow and if there's going to be workforce housing. And if not, our robot's going to be taking your orders and stuff like that. There's certain things also just from the spirit of a community that I don't think you want to say, well, this is a 6-figure and over, or else you can't live in the, city proper, even MSA in a few years. So we're conscious of that. We'll see how it plays out. But, in other parts of the country, I don't know if there was that level of consciousness, and that's why folks are moving here.
Yep. There's a lot to love about Texas. Obviously, it's a very popular market for commercial real estate for the reasons you said. Business friendly, a lot of job growth, population growth. Easy to do business with, and lots of things there. Obviously, you want to pay attention to some of the other sides. You think about how much competition there is. You think about the new development that's taking place. Obviously, you want to make sure that the business plan, whatever you're looking for, makes sense in the market with the level of competition there. Dan, for folks who want to learn a little bit more about you and investing with you, what is the best way for them to reach out?
Yeah, absolutely. And as we shared, I love to meet folks, be an educator. So LinkedIn is great. And please said, I heard you talking to John and this was the best podcast ever. And let's learn a little bit more. That's fantastic. In terms of, we didn't touch much on self-directed accounts, but the ability to use your retirement, there's a great, I don't even want to call it an FAQ because it truly is a knowledge base at rocketdollar.com/learn. And then referencing what we've talked about, whether it's the multifamily or say, hey, I sold a property and I want to move to a Delaware statutory trust instead of a 1031 or instead of paying taxes. bvcapitaltx.com is a great place.
Awesome. We'll make sure we link to those in our show notes. And listen, if you got great knowledge, if you got some good insights from our conversation with Dan, make sure you leave us that rating and review. We're going to move on to our round of insights. Give me a failure or an apparent failure that sets you up for later success.
Sure. Referenced it before, but I know, you have an 8-year-old, we have a 6-year-old. We were in baby bliss. So going back higher math here, 7 years. And I said, this is a home run. It's going to be a few months. And so I did a hard money loan. I played lawyer with all the fancy terms just in case. Well, it went 3 months. Our son was born. I'm like, we'll give him another 3 months. And then you kind of wake up from the fall. You're like, oh boy, this is not good. And you learn certain things such as, it's not exactly chronological order when you file with certain entities to say, hey, my loan is not working out. I don't think this deal is working out. So after a year of back and forth, which I ultimately did lawyer out, I was very happy to get out at 70 cents on the dollar. But I said, ultimately, some of it could have been on me, my lack of diligence, but also the other gentleman. He was a one-person, shop at the time from the GP level. So that was a big sort of learning for me that now that said, I'll still support folks. I mentor a fair number of startups in the fintech and prop tech space and otherwise, and other folks coming up and going in the syndication space. So not saying that I won't write a check, but I think at least having the broad team or the understanding set up first is when I think the money moves.
Give me a digital or mobile resource you recommend for your business.
Sure. I like otter.ai. Why I share this, particularly for folks, John, such as yourself. I learned this from Brian Briscoe. He has the TGIF on Friday. It either came from him or somebody in his community, is that it's a transcribing tool. So you want to be careful you're not big brothering everything. But if your spirit is education and, after, maybe on the fourth call, it sounded a little better than the last 3. If everything is transcribed, and probably gets to about 98, 99% correct, you can take this upload, move it to a blog, move it to your online content. So I think it's something that folks also on the other side are more comfortable with, particularly if you share, hey, this is why I might have the record button on.
Give me the book you've recommended or gifted the most in the last year.
Sure. Ray Dalio, Changing World Order. I always struggle on titles a little bit. I remember the details and the authors though. So what it is, what I love, and for my left brain folks here, it goes from the last 500 years, but even before, talking about the relative dynasty in the 6 stages. The US is in stage 5, China's on stage 2, and stage 6 could be a soft landing, or Germany in the 20s, hyperinflation, etc. So it kind of pulls the politics away, although it recognizes it, to say, hey, here's where we're going. It's cyclical. It's going to happen. So the question here is, I think one, it's just for kind of your inner well-being in the 2020s. There's going to be a lot of friction above and beyond COVID. I think just becoming comfortable with that. And Dalio is just one of the ones that I've gifted, because it does talk about history and brings in some pretty unique stuff. And it's a bit more global than some more US-centric books.
What's a daily habit that helps you stay focused on your goals?
I call it the backwards meditation. I actually left as I was doing it this morning. So, you're in bed, you kind of flip yourself and you put your legs up the wall. So, I'm a little thick up here. So having the blood at least flow down and maybe get to my head, I think is a decent way to start. But it's something I practiced maybe like 3-4 years ago. And I'm like, this is a little more convenient. And I do think the net effect, I know a lot of experts say you have to be sitting, your feet have to be on the ground. Like anything, I think if you get your mind to work, it's pretty good. So it's a great way to start the day.
I love it, man. It's I'm visualizing that, just hopping out of bed, or not out of bed, but turning around and putting your feet on the wall. It's probably a very interesting sight if someone's actually peeking in and watching you in that moment. All right, we got 2 more. Okay, we had a lot of conversations here about investing, but give me your number 1 insight to be a successful investor.
It's going to sound cliche, but I think diversification. And here's why. I think, one, you don't put all your eggs in the same basket with one operator. You don't have to spread yourself across 10 asset classes or geographies or duration. But I do think you move, as I said, for me, it naturally came with self-storage, some residential, and then multifamily. So I would say here, you have your residential and multifamily housing. You may want to think of something such as an industrial or self-storage to have another chip in. And likewise with duration, I have different pieces that pay monthly distributions, some that I know are going to start paying in a year or two, and some that are your true, 5+ year endeavors. That's more going to be almost like when you invest in a startup, and this is backed by real estate. So feel a little more comfortable with the end cash flow it's going to be.
There we go. All right. And we're going to lighten the mood here. You mentioned Austin, Texas. Lots of good food options in Austin. Give me your favorite place to grab a bite to eat.
Got it. I'll have to go with my barbecue recommendation. Everybody's expecting me to say Franklin's. I go with Lambert's. So Lambert's is downtown. The building's been there since the 1880s. It's just a really, really cool experience. And I think the barbecue's solid.
Lambert's it is. All right. Good to hear. Well, listen, Dan, lots of good information. I appreciate you sharing your journey from, really working in, the equity space and learning everything there, to becoming a passive investor yourself, focusing first on investing, then educating others, and then finally being able to bring them into some of the opportunities that you are exploring. Thanks for talking to us about trust and, what it takes to build and develop trust, and the things that are your red flags when it comes to trust with other investors as well. And for those folks who want to reach out and connect, give us your contact information one more time.
Sure. So I think best is on LinkedIn. Just say, hey, we heard it here one-on-one first. Dan Kryzanowski, not too many of those on LinkedIn. So thank you.
All right, Dan, thanks for coming on the show today. Hope you have a great day, and we look forward to staying in touch.
Awesome. Thanks, John.